Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Hit like if you like the show The Office. That being said, in today's episode, I'm talking about the case for Bitcoin to hit the precious $100,000 mark this year in 2021. Plus, we're talking about Algorand, Audius, our usual 404 Logic Not Found segment, and more, so make sure you stick around for all the updates. Now, if you like crypto, please subscribe to the YouTube channel, hit the bell notification button, or if you're listening to the podcast, please follow on your platform of choice so you get a heads up whenever I post new episodes of Crypto Over Coffee every Saturday. Just a friendly reminder as well, please be aware of scammers that are in the comments posing as me and other crypto YouTubers. I do not have a WhatsApp. I will not ask you to contact me, and I will not reach out to you to sell you mining equipment or the next best investment. You know, that's not what I'm about. If the comment does not have the name highlighted like you see here on the screen, it isn't me, and you can safely report them. Please be safe out there, folks. Do not get scammed. Now, in partnership with the folks at Keystone, I give away a Keystone tablet steel seed phrase backup device in every episode by picking a random comment from the video. And of course, I do give away one Keystone hardware wallet per month as well. Just for transparency, the product is only available in select regions. So if you win and you're from an unsupported region, I'm just going to send you some Bitcoin instead. Now, the winner of last week's giveaway for the Keystone is here on the screen by random draw, so big congratulations to you, and of course, I will be in touch for you to claim your prize. Now, my friends, the crypto market update today as we enter the weekend is yet again looking pretty good. We've had a pretty good run of it lately, so I'm fingers crossed it continues. At the time of recording, Bitcoin sits right at the 50K mark, Ether is within striking distance of 4,000, and many altcoins have made significant gains as they coil for potential next leg up. It goes without saying that these are the times that people wish for in crypto, when prices are up and things seem ready for more upward movement. Sentiment is good. Now, I do want to caveat and say that for cryptocurrencies like Ether, for example, some of the gaming altcoins, and likely several NFT projects, we will see significant pullbacks before we see continued growth, in my humble opinion. There will be exceptions, but let's just take Ether, for example. It's gone up 20% in a week, which to me is begging for a healthy consolidation if my fundamentals and anecdotal evidence are any indicator. Which brings me to my next point and the title of this episode. Many people have emailed me, DM'd me, etc., asking me whether I think that Bitcoin can hit $100,000 this year in 2021. It seems like everyone is curious whether this price prediction that you see tossed around all the time on social media is actually legit. And now usually I'm going to tell you that your favorite influencer's price predictions are intentionally clickbaity and hyperbolic because unfortunately that's the business that we're in on YouTube. And you hate the game, not the gamer. We have to get clicks. But in this case, those calling for 100K Bitcoin are actually rooted in reality from my perspective. Now, you know me, I'm not a technical analysis guy. I don't do the whole moving average, drawing lines and arrows thing, but I understand the fundamentals of this market and the economics that drive it. Those fundamentals point to everything you need to know about Bitcoin and its ability to hit 100K. I'm going to lay out the positive case and the negative case, so both sides of it. But let's start with the positive. Here's how Bitcoin can, and in my opinion, likely will break the six-figure mark in 2021. The first is that we're seeing unprecedented institutional interest in Bitcoin that changes the dynamic of the market entirely when compared to 2017's big bull market. With institutional investors locking up Bitcoin supply, whether directly or indirectly through something like Grayscale GBTC shares, you have larger scale, stable holdings of Bitcoin that are not then circulating in supply on the market. Institutions also behave differently than retail investors, not panic selling at the first sight of blood, or, of course, being tied to an unlock period on Grayscale might help. Now, this is only half the story, because institutions and businesses that are buying and holding large quantities of Bitcoin are just the proverbial crack in the dam that sets up for a run to 100K plus. It's retail investors that will likely bring the surge, which eventually opens the floodgates for Bitcoin. Why? Because it's fundamental supply and demand. We're seeing unprecedented and frankly unbelievable trends in terms of Bitcoin leaving exchanges and going off the market in terms of outflows to the tune of tens of billions of dollars, which results in a reduction in the total circulating supply of Bitcoin for sale and sets up a supply shock scenario for Bitcoin. This right there is the key. You have miners selling less and less Bitcoin to market. You have organizations like PayPal gobbling up Bitcoin for their crypto products, among others. And you have increasing demand across the market for Bitcoin. And what happens when demand starts to seriously outstrip supply? The price is adjusted upwards in response to that imbalance. And in a supply shock scenario where we have continued institutional and retail demand, increasingly lower supply on the market, and then a sustained retail FOMO buying spree, we will likely see a very, very heavy push towards 100K. This is possible, not just possible, it's almost likely from my perspective to happen. And it's all about supply and demand fundamentals. That said, there are a number of counter cases here. The negative scenarios that can make this move to 100K impossible or just a lot more difficult. And that would be things like significant regulatory action in the US or other big markets, of course, a global economic meltdown similar to the Black Swan event in March of 2020, or a reversal of the exchange outflows trend that we're seeing today. If one or more of these things happen, we could see sentiment shift negatively and, of course, shift away from the bullish scenario that we just discussed. For example, if we see exchange inflows start happening and introducing more supply to the market, we see large whales selling, that would be a concern. Of course, if regulators take a big shot at crypto again, like let's just say imposing draconian rules on institutions holding crypto, that could also be a big problem. I'm not saying that's likely or that it's going to happen. I'm just giving an example, but be prepared for anything, right? I mean, here's the deal. We can speculate all day long. It's fun. But if you want my pure opinion based on the data that I have to decide on this, I believe that we will see Bitcoin peak in 2021 at 100K, give or take. And then we will have another reset. But I want to know what you think. Do you agree? Do you disagree with my thoughts? I want to hear what you have to say. Now, if you rewind back to some of my favorite altcoin videos, ones that I've done in the years past, you'll remember me mentioning the awesome work that the Algorand team has done building their proof of stake network. The Algorand blockchain itself is very well constructed, and it hasn't gotten the attention it deserves thus far. I'm thankful to report that Algorand is sponsoring some segments on my show to highlight some of the awesome work that's going on in their world right now. So I want to first say thank you to Algorand for doing that. It helps make this show possible. Today, I want to share with you news about the Algorand blockchain's use in El Salvador as part of the seemingly widespread adoption or development of adoption of blockchain and crypto in the country. You've all probably heard about Bitcoin being legal tender there, but there's also this news about Algorand. Recently, it was announced that blockchain company Koibanx will be building blockchain infrastructure on top of the Algorand blockchain for El Salvador's government, which will be used to digitally store and validate official documents related to commerce and business, for example. Think things like house titles. The immediate benefit is increased transparency and verifiability of documents pertaining to these actions, like transactions made between the government and business entities. Having already become home to the popular USDC stablecoin, Algorand getting adoption for a unique use case like this in El Salvador for an actual case that people will use is another example of traction for the protocol, and quite frankly, it's quite scalable, really easy to use. I've really enjoyed using Algorand. In other news, the blockchain-based music streaming platform Audius has been continuing its truly inspiring ascendance into the mainstream with its recent announcements related to TikTok integrations and NFTs. Audius gives music artists the ability to cultivate a community, to share their music to streaming consumers, and monetize their art, all from this one single platform, which has racked up millions of users already. Recently, Audius announced an integration with the insanely popular short-form video content platform TikTok, where Audius-created tracks can be exported to TikTok to be used in content there. That's already huge in and of itself. Now, an additional layer of social integration is being built with the addition of the NFT marketplace capabilities on Audius, basically a way to view NFTs on the platform, which comes through the Phantom Solana wallet and tools from the Metaplex NFT marketplace, also on Solana. Audius users will be able to feature NFTs and find NFTs on the platform, which opens up a wide variety of unique experiences in the future from my perspective. And I'm speculating here, but things like pairing music with NFT visuals, digital merchandise for artists on the platform. If you haven't tried Audius yet, actually, you definitely need to go give it a go. The user experience is really solid. There's good music on there. The music is high quality. The world of music and art are really intertwined, and NFTs making their way to Audius as a discovery layer right now, in my own speculative opinion, is just part of a much broader strategy and integration that will come to bring monetization opportunities and experience opportunities to music and their users alike, people who consume their music alike. Now, as you know, I'm a huge proponent of interoperability, and I believe that it will be the catalyst for true sustainable mass adoption of cryptocurrency and all the things that come with it. Recently, news came out of one of the most promising interoperability ecosystems, Polkadot, that I think is really significant. News broke that the DeFi lending protocol Cream Finance would be coming to the Polkadot/Kusama smart contract platform Moonbeam as a foundational composable element for DeFi. First, Cream Finance will come to a parachain on Kusama, and then it will make its way to Polkadot when it goes fully live. Now, for those unfamiliar with this ecosystem and how these things relate, Kusama is the canary network for Polkadot, basically where core functionality for Polkadot goes live early in a live self-sustaining network. So Kusama is a blockchain. It's not a test net, but it gets all the features first. Anyway, here's why this news is significant. Liquidity and lending are the foundational elements to successful DeFi. So the introduction of an established DeFi lending ecosystem like Cream Finance to Polkadot and Kusama is like a base composable element for other DeFi projects to be built around. Like a snowball effect, the first base elements can be used together to create unique and powerful applications on Polkadot and Kusama down the line. And the interoperable nature here will be absolutely game-changing in terms of the diverse assets that will be available in this world. So I'm so excited for what's to come for Polkadot, and of course, Kusama is absolutely crushing it right now. Now, folks, next up is today's game of Fact or FUD, where I take a piece of no good, very bad news and tell you whether it is fact or simply fear, uncertainty, and doubt. This week, we got a piping hot DoorDash delivery of regulatory fears when news came out about a reported SEC investigation on the development organization behind the DeFi mainstay Uniswap, the premier decentralized exchange and swap protocol out there. You've probably used it, or at least heard of it. Then it seemed this news got a double down and got worse with reports of Uniswap not being the only DeFi protocol development org that's being investigated. Now, I fully understand why people would feel queasy about this, given the somewhat uninspiring and frankly ill-advised regulatory rhetoric we've been seeing lately around crypto. However, I want to quell the fear a little bit here, at least for right now. An investigation is very negatively connotated, but in reality, in this context, it doesn't mean much yet. From what I understand, the SEC refers to an investigation as a mechanism to gather information and evaluate if further action is needed. But it's that further action that we really have to be worried about. What does that look like? We have no idea what the SEC might do, what they might find, and what further action could be taken, if at all. It's all speculation right now. So here's my baseline read on this. Let's be cautiously optimistic, but skeptical, and plan for the worst. But let's also not overreact to reports that the SEC is conducting research. Right now, anyone reporting this as a bona fide, 100% certain indicator of some huge step by the SEC against DeFi is quite frankly bringing FUD to the table right now, because we really don't know yet for sure what's going to happen. So let's wait and see, but don't freak out. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are, as of yet, uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Now, speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please do hit that like button, get subscribed, follow the podcast, whatever you can do to tell those robots that you're enjoying the content and others might also do the same. I'm a little bit sick in terms of my voice, folks, so I'm losing my voice a little bit. My apologies, but thank you for that in advance. I'd like to pose this first as a question to you, even though I'm just sitting here talking to an inanimate object, my microphone and my camera, but please raise your hand if, in the time that you've been in crypto, you've noticed that every time crypto prices go up, there's new sensationally bad news from China about crypto. Raise your hand. Is it not dubious that whenever markets look good, we get a big helping of China mining FUD, or China crypto ban FUD, China this, China that. However, no matter how many times we read the same story with different names attached or different sources, the crypto community collectively seems to buy into it, and I just don't get it. It's like the boy who cried wolf, except the boy's gotten away with it 100 times, and everyone still runs for the hills when he says there's a wolf. I've been in this space a long time. I've read the same stories about China more times than I can even recount and remember. And every single time have not only been totally fine and totally okay, but the crypto markets and crypto spaces continued on its merry way unperturbed. In fact, today we are even in a better position than we have been before, with reliance on China for proof of work mining at what is reportedly historic lows, mining moving to North America and abroad. So I pose this assertion. So what if China wants to ban crypto? So what if China wants to squeeze miners out? Is this technology not built on decentralization? Are we relying on one country as a barometer for global success? I mean, I would assert that the answer is no. I mean, as hard as it is for me to say this as well, because it would destroy my career and all of what I worked for over the last 11 years. But if the US banned crypto, it would also probably survive just the same. It would suck, and I don't want that, but the fact remains. My point here is not that I think either of those things will happen, but that the fear around them is unfounded. Not only that, but so far, the stories about crypto doom and gloom in China have been overblown, and all the people who panic sold crypto on the back of that news have probably not done so well with that strategy. To a certain extent, it is illogical to continue to keep putting stock in stories that seem to be coordinated exaggeration at best and fabrications at worst, and they seem to never materialize as sensationally badly as they were originally posed. If I had to sum up this whole thing in one 404 logic not found statement, it would be this. If you believe in crypto long term, if you buy into the ethos of the decentralized technology itself, then getting shaken out of the crypto market by traditionally overblown news stories about China banning crypto, mining, etc. is a 404 logic not found. All right, folks, let's go ahead and do some community Q&A. I'm going to take a coffee break, and I love to answer questions from folks who watch the show. I've got questions from last week's episode from the comments that I'm going to answer. And I want to remind you, if you have questions that you want answered, any questions, fine, beginner questions, advanced questions, whatever you want, leave them in the comments on YouTube. You can tweet me at Hashoshi4, and I will pick some answers or pick some questions to show off in the show next week. So, all right, let's dive into these questions. Alrighty, first question of the day is from some punk off the streets. If NFT games implement cross-chain gaming, couldn't that cause game imbalances that gamers despise? For example, an early developed Metaverse game has been around since day one. It's built up a huge profile with weapons, equipment, etc., and then moves across to a new Metaverse game and is now overpowered from the very start and has an unfair advantage. Wouldn't this be a huge concern for cross-chain gaming? So this question is sort of in response to some of the discussion we've had in previous episodes around metaverses or digital worlds, digital games with NFT items. So non-fungible tokens that represent items, skins, attributes, and things that can move from game to game, because now you have items that live on the blockchain, not in a walled garden of a game. That's the premise. Now, you're completely correct in the sense that if you have somebody, let's just say, we'll relate this to games that people are familiar with. So let's just say you're in Fortnite. You've played Fortnite a ton. And let's just say, for the sake of this argument, that Fortnite does have sort of competitive advantage style items and not just skins. Let's just say you can earn like insane weapons in Fortnite, right? If that's the case, in that game, then you want to move to a brand new game where the items you've earned in Fortnite can be moved over to that game. Then, of course, if you can bring those things over and they have the same attributes in that new game, yeah, you might be at a competitive advantage because people who are brand new are not going to have those items. The way that you get around this are a handful of different ways, right? Of course, each game is going to be probably specific in terms of what items you can have. And you know what's funny? I was thinking about this the other day, and I was talking to a couple of people who are building games in this space. They said people can move their NFTs from one game to another. Maybe a sword in a medieval game comes over to our game and actually is a completely different item. Maybe it's a magic wand for spell casting, right? So it doesn't necessarily mean the item is going to be moved and is going to remain exactly the same from one game to the next, but that you could use it. Where I think you're first going to see this happening is I think it's going to be in terms of cosmetic items. Being able to carry over a cosmetic item from one game to another one to bring your personality and your avatar across games. So if you're, you got a cool like dark medieval helmet in one game and you want to move that over to, another, magician game, whatever it is, you can do that. So it's going to be interesting to see the dynamics, and I totally grasp your point, and I think you're making a great point. How are you going to balance games where items are not isolated to one single game. I think it's going to be really interesting, and we're going to see some very different approaches to that. The biggest thing, though, the most important thing that's going to happen is there's going to be a secondary market across games. So now, if I have a Fortnite skin that you want, and you've got a, let's just say you've got a spellcasting book in another game that I want, I can trade with you for those items because they're all on the same blockchain, or they're in an interoperable blockchain, and I can trade those things on an open marketplace, and I can get the item I want, you can get the item you want, and we don't have to do so in the context of that one game. That is where the power lies. Thank you for your question. Next question is from Stan KMT. What happens to ERC20 tokens when ETH 2.0 launches? Do they become cheaper to send around? The short answer is yes. The only way that you're going to get cheaper transactions on Ethereum, lower gas fees, is through scalability. Ethereum 2.0 is all about scalability. It's all about being able to create an environment where you can run more transactions through the network, where you aren't confined by the same restrictions and the same sort of cap performance that you're going to have in the proof of work network today. There's going to be a handful of ways that this is done. You're going to have rollups, basically bundling transactions into one proof, if you will, and that's highly simplified, mind you. You're going to have sharding, not charting, but sharding, where you're splitting up the blockchain into many sort of concurrent parallel processing units. There's a lot of strategies in place. Then, of course, proof of stake. So you're going to have higher scalability, higher throughput in ETH 2.0, which means the unit cost of a transaction is going to be less. There's more supply in terms of available transactions in the time scale of an epoch of consensus. And then that means there's going to be less cost per transaction generally. So that's what you're going to see. And that's not just for ERC20s, that's for all sort of different contracts and all sorts of different standards and transactions. The thing that you want to note is that we are really not sure exactly what that's going to look like and what the pricing is going to be. We know it's going to be better. We think it's going to be better. There's a lot of moving parts. How is gas going to be priced then? How are different opcodes going to be priced? Is it going to be the same? Is it going to be different? A lot of stuff is in the air there. We'll see. But as a general rule of thumb, yes, it will be cheaper to send transactions on Ethereum. Next question, Averageocrity. Wow, that was a hard name to pronounce. I don't know why. Thank you for your question. Currently, I'm seeing that multisig is utilized for Bitcoin to improve security. Would you be able to discuss if other crypto tokens have similar features offered by custodians? So multisig stands for multi-signature, and it's basically a scheme where you have to create a unified signature, or sometimes you can also look at it as ascribing multiple signatures to one transaction in order for it to be accepted. Multi-sig is a mechanism for better security because if someone were to compromise one key, they wouldn't be able to send a transaction. Because if you're in a 3 of 5 multi-sig environment, you have to have a valid signature from 3 of the 5 total acceptable keys to process a transaction. That's the general idea. So it makes the attack surface a little bit more favorable towards the user and the user's funds. Multi-sigs are a very common mechanism for security, and that's what this question is all about. In terms of multi-sig, there are multiple different approaches to it. Multi-sig is available in something like Ethereum, for example, and most platforms that have smart contracts can set up multi-sigs. You look at Ethereum, there are multi-sig contracts, which are built for this same exact thing. Maybe it's not quite what people are looking for, but then there's also Geonosis Safe, which is sort of a platform built to improve security and custody for assets, particularly in the DeFi space. There's multi-sig involved there. A lot of cool things. If you're not familiar with Geonosis Safe, by the way, please look at it. It's freaking amazing. The other thing is that in a lot of other networks, let's use Cardano as an example. With smart contracts, if you played with the Marlowe testnet for sort of graphical user interface contracts, you can create basically multi-sig contracts in testnet using that tool. Very easy. So most platforms have the capability to create some sort of multi-sig scheme. And most custodians, as they start introducing more assets into their mix, particularly when you start looking at these institutional custodial companies, they probably already using multi-sig. They're probably using sort of sharded keys where they're splitting the keys up, probably doing a lot of that stuff. Multi-party computation, There's a lot of different strategies here. Multi-sig is one. and it is available on many different tokens. Thank you for your question. And the last question of the day is from Eduardo Camillo, my apologies. Hashoshi, do you know of any good vanilla blockchain courses out there? I didn't want a Solidity course or an Ethereum course, but one that deals with distributed systems, core concepts, basic security concerns, stuff like that. Any you recommend? Eduardo, there's a really good course from Berkeley, based on like their blockchain club that's free and available online in videos. That's a good introduction to like just blockchain itself. In terms of distributed systems, I think MIT actually has an online course around distributed systems and blockchain, and on udemy.com, UDEMY, there's some really good distributed systems courses there. I will link some of those up down below, but if you don't see what you're looking for there, send me an email, info@hashoshi.com, and I will send you some more links, okay? So if you're interested in learning more about blockchain, Berkeley, MIT, udemy.com. Those are some great sources, and I applaud you for trying to learn new things. All right, folks, thank you so much for your questions. I want to thank you for watching Crypto Over Coffee. If you have some time to stick around, please do check out my video about my best top 3 VPN picks. A VPN is a great thing for you to have if you're a crypto trader, especially if you're on the go. People are starting to leave the house again. If you're on public Wi-Fi and you don't have a VPN, you're taking a risk. I would always have a VPN, so if you're interested in picking one up, please do check out this video. I will link it up right here. Thank you so much for watching Crypto Over Coffee. Thank you so much for listening to Crypto Over Coffee. I wish you and your family a great week and weekend ahead. And until next time, cheers.